Hello, everyone, and welcome to this edition of FTTChats. I'm Lisa Moyle. I'm Director of Strategy at VC Innovations. And today we're really delighted to be joined by JimMarous. Jim has many hats. One of them is as co-publisher of the Financial Brand, owner and CEO of the Digital Banking Report, and also a well-known podcaster and host of Banking Transformed. Hello, Jim.
Hey, great to be with you today, Lisa.
Thank you so much for joining us today. And I'm really excited to kind of have a bit of a conversation about the role of community banks and credit unions across North America, but obviously in particular today for discussing, their role in the ecosystem in the US. There's so many of them and they come in all shapes and sizes. And I'd love to get your views on kind of how their position has changed in this rapidly changing world of digital transformation.
Well, it's interesting because, as you know, in the U.S., we have so many banks and credit unions that serve the consumer. And there's a lot of things that have happened since COVID. It was already in process before COVID, but really a lot of the changes have really accelerated tremendously. So we have done a lot of research recently with the Digital Banking Report. We're trying to find the pre and post COVID changes that have happened. And one of the major changes we've seen is organizations really had to double down on digital. If you did not have the ability to open an account, to converse with your consumers, your customers, your members, if you did not have the ability to truly bank digitally, you really were caught unaware, and the consumer was pretty much put in a situation where they couldn't transact the way they may want to transact. What we did see was there were those organizations that were ready for digital, that already had digital account opening, already had the ways to bank digitally. And then there were those that I would consider to be faking digital. Those who said they had digital, but still required the member or the consumer to come into the branch to open an account, to do transactions. Those organizations were really caught off guard. Now, it's not a clear delineation between credit unions and community banks and big banks, but there is a definite difference. The biggest banks all had the digital capabilities, and they benefited greatly, not just when everything was shut down, but they also benefited greatly when we had the PPP loans, for instance, and they were immediately able to turn on their digital lending processes. Now, what should be remembered is that not every community bank or every credit union was not able to perform. There were many organizations that were ready for digital, but as a category, community banks and credit unions, they came up to speed quick because they're very agile in the way they do business, but many were not prepared. What we did see, though, in those larger community banks, the regional banks, the organizations with over $10 billion of assets, but less than 50 billion, there's a tremendous gap. And a lot of that has to do with culture. So we really see a big difference between the smaller organizations, the bigger organizations, what I call the mid-market. And the mid-market has more challenges with the culture issues and still is not as quickly able to get up to speed digitally. The community banks and credit unions, really, there's some that did very well, some that didn't do so well in this whole new environment we're in.
That's so interesting. I like the way that you frame that as faking digital for those ones that gave the appearance. And it's also interesting that, thinking about the top end and the bottom end, broadly as you described, they did okay in terms of responding to their customers' needs during the crisis. But that kind of middle section still has quite a ways to go. And thinking about, some of the age profiles, what we think of like the typical age of the customer of particularly maybe a credit union and also some community banks. Do you think that they can win those younger, much sought after millennials and below that, fintechs are going after, challenger banks are going after, neobanks are going after? Do you think that they can kind of keep up with winning that next generation of customer?
There's a real challenge. And the challenge is not just the fintech providers, but also the big banks. There was a time in 2008 where the comment or the term too big to fail came into vogue. And I have a concern that there are some organizations that may be too small to succeed. And we're not talking about just the smallest organizations. We're also talking about those middle market firms that I talked about that really have an embedded culture, that their legacy banking culture. They have organizations that have senior officers that have been in banking for 20 to 30 years. And there's a real concern because it's hard to truly digitally transform your organization. When you're really talking about building digital from the bottom up, from the back office to the front, you're really talking about changing not only your back office technology, but the way you think. It's not just about having a mobile app or a digital app. It's really about doing things the way a big tech or a fintech does things. So when you're talking about the age demographics, right now we're already seeing that the biggest financial institutions, the top five, top seven banks in the US, are capturing a lion's share of the younger customers and of new customers opening new accounts. Okay, so what you have is a situation not just of the younger base, but of those people that are actually changing accounts. They're going more to the bigger banks. So it's a real challenge. So you're really going to have to segment organizations, the smaller credit unions, the smaller community banks are really going to have to do a good job at not only pivoting to digital, but segmenting who they want to serve and serve them better than anybody else. Now, a few other things are happening in the marketplace. Number one, there are some fintech organizations right now that are going to be under funding difficulty because a lot of the VC funding is not going to the startups that are smaller, that are not as established. Even those big startups are not getting the funding rounds they used to get. So we may see some organizations either partner with or acquire fintech organizations that can move them forward digitally. That's a really good placement. In addition, again, I've mentioned it in the previous question, that small organizations have the ability to pivot quickly. A lot of their leadership is aware of what is needed, but it's really going to be how can you serve the customers best? We have seen, though, during COVID, that a lot of the smallest organizations, the credit unions, have done a really good job in serving, for instance, the small business marketplace. They're community-based organizations that have community businesses that really are struggling right now. And I think right now, not only is there a challenge, but there's a tremendous opportunity because during times of rapid change, like we're in right now, you have the ability to stand out if you're working on behalf of your members, your customers, and your small businesses. If you show a differentiation, the way you're serving your base, you will do well in this marketplace. It's just a question of how many organizations can do that.
So thinking about those organizations, which you described so well as being really embedded in their community, understanding their community, or a credit union that's joined together by a common bond. I think I like the way you positioned it, that this is a real opportunity for them, right? If they can show that they understand and can deliver value to their customers. In terms of keeping up with that pace of digital innovation and that travels so quickly, how can in practical terms, how can they do that if they're a small organization and perhaps they don't have the resource internally, or even that kind of middle band that you described that might have some of the cultural blockers that you described? How can they pivot and keep pace?
It's interesting. Number one, culturally, they've got to want to do that. What we have found in our research for the digital bank report, and we've done research on financial marketing, the future of work, innovation, and digital transformation, and we're about to do one on digital lending. What we're seeing is a consistent response to the fact that organizations know what needs to be done. They also know how it can be done. It's a matter of doing it. Now, there's a lot of reasons. There's more than enough excuse out there. It can be budget. It can be the marketplace. It can be so many priorities, all that. But really, those organizations that are committed to delivering a better customer or member experience, let's take Navy Federal Credit Union, for instance. When COVID came on, they realized that their segmentation strategy had changed, that now they had to resegment their members based on, are they struggling? Are they simply feeling pain but are in a position to do better? How can we help them? And they found that car refinancing worked very well for those members that had good credit ratings that said, I need to reduce my cost and protect my financial holdings. You also saw Citizens Bank of Edmonds, Oklahoma. Joe Castillo is getting a lot of props quite a bit, who did really well with the PPP loans. Why? They committed that they were going to be the best, and they reached out and they found a partner that could make it so they could provide the technology over a weekend. They were working 24/7 to make it so that on Monday, when they opened up, they could do a better job of meeting consumer needs. They also met business needs. So what they did, they did all these digital transformations, but it's a matter of working quickly. It's all cultural too. Both those organizations have an amazing commitment to doing whatever's necessary to serve their members or their consumers. And I think when you really get down to it, a lot of this gets down to culture and the desire to pull the trigger. Now, from the standpoint of what do you do if you're a small organization? Partner. You can't build it within. And there's a lot of partnerships, opportunities out there. There's a lot of organizations that already have gone through what you're looking to go through as a credit union or a community bank that are other organizations that they've done it with. Leverage that experience. Leverage the experience that's available through different groups that have been established to provide the most innovative options out there. And then double down on doing it, because now the opportunity is so great to transform the way you do business. If you don't do it today, you will not do it next year. I believe, and I think most people agree, funding is going to drop. Budgets are going to drop. You're going to have to reprioritize where you're spending money. But we just did research on AI and digital analytics. We find that 75% of organizations think they're not adept at AI and using data. That number actually is an overarching number. When you start looking at small organizations, it goes to over 80% of organizations. So they're not adept. It's not moderately adept. They're not adept. You've got to do those things to be able to know what media to go to know how to market your products, to know how to capture new consumers, new members. And so I think that whole thing means starts at the top, and then you really have to put your money where your mouth is, for lack of a good term, because just talking about being a digital organization, just talking about wanting to personalize your experiences, just talking about being able to deliver on the digital needs of today's consumer, talk is not going to do any good.
Yeah, so obviously, particularly at the smaller end, partner, but it sounds like that might be true all the way through when you talked about, the level of expertise around AI and big data. And I imagine that any credit unions or, people thinking about these issues in credit unions or community banks will take heart that there's a pathway, if you can follow it through in that way. And I know that will be.
I'm sorry. No, it's a commitment level. The reality is every organization can survive. Sometimes it's going to take segmentation. Sometimes it's going to need community outreach. Sometimes it's going to be using data analytics. You're still going to have to prioritize where you can put your funds, because there's not unlimited funding. But we can't keep on hiding under the rock when putting our head in the sand with regard to digital transformation. Digital account opening, people all said, we had in our research, we said 70% of organizations said they had digital account opening capabilities. Further down the survey, we asked, how many of you require a consumer to come into a branch to open the account? 70% of those said they did. So let's redefine what digital means. When all of a sudden all the branches are shut down, except for in some cases drive-up tellers, the reality is those who don't have the capability, that was faking digital.
Yeah, absolutely. It's always interesting to see the changes that a crisis brings. Jim, you'll be joining us on the 9th of September, and we'll be talking more in depth about the opportunities, challenges around innovation in community banks and credit unions. I know you already pointed to kind of the Navy Credit Union as, having really done a great job in segmenting its customer needs in response to the crisis. Can you think of any other examples where they've really managed some of these challenges, whether it's around going digital, reaching new customers, around some of those challenges?
Well, as I mentioned also, Citizens Bank in Edmonds, Oklahoma, Joe Castillo is the chairman there. They have very little branch exposure, but they continue to do things that are different for the community and stand out. I mean, she reached out and got recognized by Mark Cuban, which isn't a bad way to build some small business lending.
Yeah.
But another thing they did, when the federal government was coming out with the benefit checks to consumers, they let their customer base, their member base, overdraw their accounts by the amount of their future benefit checks before they even came out. So they said, we'll credit your checks ahead of time, knowing what you're going to receive. That's stepping up and doing things differently. And there's a lot of very small organizations that have done that in the marketplace, not just the big organizations like a Navy Federal Credit Union or AARP that have done very well. But I think the key is that when you find that you've maybe not met the member need or the consumer need, and there's been examples where even the biggest organizations have stumbled during this time of change, is how can you change quickly to take care of it? I think now more than ever, we're going to find that consumers are going to remember the financial institutions that had their back, who were there for them, who recognize them as a person as opposed to a segment or as an overarching base. I know in my situation, I work with a large bank for my business products, but I found that while they were knocking on my door and calling me on the phone before COVID on a regular basis to try to see if I'd transfer my retirement funds to their bank, the reality is I did not hear from them when it came to the COVID crisis. They reached out to me as a mass and they asked, if you don't have online banking, sign up for today. And I'm going, that should be the easiest segmentation world. I have that already. And they never reached out and said, by the way, how's your small business doing? And even when I asked about it, they took forever to get back to me. So the challenge is now in my mind, I knew that they weren't there when I really needed them. And maybe I can't close my account today. And I think we have to remember also that organizations can't just use account closings as a measurement of whether or not they're doing well. Because I don't have to close an account. I can open an account elsewhere and simply use my current bank as a warehouse of funds, or maybe not even that. And what we're seeing is people are open secondary and tertiary accounts that really are becoming very primary in nature, both in the UK and the Europe, as well as in the US. And I find that I have an account that builds savings for me. I have an account that takes care of all transactions for me. I have an account that takes care of payments to and payments from organizations and people I work with. I think we have to be very careful on whether or not we still have the customers we thought we had, because in some cases, we really don't have those customers anymore. They've already moved on. They're simply not closing their accounts.
Yeah, absolutely. I remember reading a statistic many years ago about the UK, about how many bank accounts there actually were, some of which were completely inactive as people move without closing. So it doesn't always capture where the consumer loyalty is heading. And that example of, a crisis as an opportunity to really kind of win your customers' trust and loyalty through just being there for them does seem like a real opportunity for some of those embedded community institutions and credit unions.
It's interesting. It's not just the organizations. COVID is an opportunity for individuals to transform themselves and get them ready to be able to be digital people within their organizations. A traditional banker or a credit union executive that's been in banking or in the credit union business for quite some time, you can see the handwriting on the wall. We're going to have more people that can handle digital functions, be it marketing, digital account management, all these customer service. we as individuals have to disrupt ourselves and embrace the change that's out there, and use this time being shut in those cases to learn about what is your next step. Because the last thing you want to be is disrupted where you don't have a career path available to you because you're doing banking or doing credit union marketing or business the same way you were 10, 15, 20 years ago.
I love that notion of disrupting ourselves in preparation for the future, Jim. And I look forward to discussing this in more detail at FTT Virtual North America on the 9th of September. And thank you again for joining us today.
Thank you, Lisa. Appreciate being on the show.